It's going to be a reading from American Jurisprudence, second edition, volume 33A, 1994 edition, federal taxation 4,000 through 17,954. Volume 33, 33A, 34, and 34A contain a modern, comprehensive textual statement of the federal tax law. Volumes 33, 33A, and 34 consist of material found in the 1994 edition of the Tax Guide prepared by the tax experts on the staff of the Research Institution of America, Inc. Volume 34A consists of material derived from the Estate Planning and Taxation Coordinator, EPTC, of the Research Institute of America, Inc. Uh, 12,452 original issue discount. On the income tax return, the election is irrevocable with respect to the obligation for which it is made. So we're gonna, is it look like 12,405 non-government short-term obligation. With respect to non-government short-term obligations, the mandatory accrual of discount interest rules are applied by taking into account the original issue discount rather than acquisition discount on the obligation. However, the holder of a non-government short-term obligation may elect to have the mandatory accrual rule apply instead of the OID rules. The election is effective for all obligations acquired by the taxpayer on or after the first day of the first tax year to which the election applies. The election is available regardless of whether the obligation was acquired after originally issued. The election applies for the tax year in which it is made and to all later years unless it is revoked with IRS content. The election must be made by the due date, including extensions of the income tax return for the first tax year for which it is to apply by attaching a statement to that return. The statement must contain taxpayer's name, address, and taxpayer identification number, identify the election, indicate the legal authority under which the election is made, i.e., Code Section 1283C2, specify the period for which the election is being made and the obligations to which it is to apply, and provide sufficient information to show that the taxpayer is entitled to make the election. No election may be made for a tax year if the period for claiming a credit or refund for that year has expired. We're at 12,450 original issue discount on taxable interest. The holder of a debt instrument issued with original issue discount must include part of the OID in income each year he holds the instrument. For in-depth discussion, see RIA's Federal Tax Coordinator, 2nd Chapter J, and RIA Analysis of Federal Taxes, Income, Chapter J, 12451, Current Inclusion of Original Issue Discount as Interest Income. The holder of a debt instrument specified at 12453 that is issued with OID must include part of that OID in his gross income as interest in each tax year that he holds the debt instrument, even though the OID is not paid until maturity. Observation: the current inclusion rules apply regardless of the method of accounting used by the holder. The current inclusion of OID rules does not apply to the following holders: holders of debt instruments issued before 85, and that's 1985, that are not capital assets in the holder's hands. A holder who purchases the debt instrument at a premium. Premium means a purchase price for an instrument that exceeds its stated redemption price at maturity, as in parentheses 12455. A holder whose basis in the debt instrument is determined by reference to his basis in the hands of a person who purchased it at a premium, or a life insurance company required to accrue discount under the rules of Code Section 811B. For the definition of debt instrument, see 12452. For the definition of OID, see 12454 at the sequence. For how to determine the amount of OID that must be included in gross income currently, see 12472 at the sequence. For OID on stripped bonds and coupons, see 12476, 12452. Debt instrument definition. For OID purposes, the term debt instrument means a bond, debenture, note, or certificate, or other evidence of indebtedness. However, debt instruments do not include certain annuity contracts to which Code Section 72 applies. 12700 at the sequence in parentheses. The term evidence of indebtedness includes the following: damn, they don't even have a definition. It has face amount certificate as defined in sections 2A, 15, and 4 of the Investment Company Act of 1940. Certificate of deposit, time deposits, bonus plans, and other deposit arrangements with banks. domestic building and loan associations and similar financial institutions, participation in demand notes, revolving fund credits, joint stock, land, bank bonds. 12.453, debt instruments subject to current inclusion of OID rules. The OID current inclusion rules apply to all debt instruments. 12.452, issued with OID other than the following. 1. Tax exempt obligations under 13.006 at the sequence in parentheses. 2. U.S. saving bonds. 12.158 parentheses. 3. Short-term obligations, i.e. obligations with a fixed maturity date, not more than 1 year from the date of issue. Under 12.400 at the sequence in parentheses. 4. Obligations issued by natural persons before March 2, 1984. 5. Loans between natural persons in the amount of the loan plus the outstanding amount of earlier loans by the same creditor to the same debtor does not exceed $10,000 and the loan is not made in the course of the lender's trade or business. This exception does not apply if the avoidance of any federal tax is one of the principal purposes of the loan. Observation: the individual non-business loan of $10,000 that qualify under 5 above are accepted from the OID current inclusion rule, even if the loan was made after the March 1st, 84 cutoff date in parentheses 4 above for obligations issued by individuals. 6. Debt instruments other than corporate debt instruments issued before July 2nd, 82. 7. Face amount certificate as defined in sections 2A, 15, and 4 of the Investment Company Act of 40, issued before 76. 8. Corporate debt instruments issued before May 8th. Corporate debt instruments issued before May 28th, 69. IRS issues a list of publicly traded obligations for which current inclusion of OID is required. This list also includes certain treasury bills, original issue discount, OID 12.454. Original issue discount defined means the excess, if any, of the obligations stated redemption price at maturity. 12.455 over its issue price. 12.456, but the OID is treated as zero if that excess is less than 1/4 of 1%, 0 in parentheses 0.25% of the stated redemption price at maturity multiplied by the number of complete years at maturity. Illustration: J buys a debt instrument that matures in 10 years from a corporation for an issue price of $9,800. The stated redemption price at maturity is $10,000, so that the excess of the stated redemption price at maturity over the issue price is $200. 1/4 of 1% of the stated redemption price at maturity is $25. The product of $25 multiplied by 10, the number of complete years at maturity, is 250. Since this is more than a $200 excess, there is no OID on the instrument. For special rules for determining OID, For special rules for determining OID on a price level adjusted mortgage, PLAM in parentheses C12471. 12455, stated redemption price at maturity defined for OID purposes. A debt instrument's stated redemption price at maturity is the amount fixed by the last modification of the purchase agreement. It includes interest and other amounts payable at that time, but it does not include interest that is based on a fixed rate and that is payable unconditionally at fixed periodic intervals of 1 year or less during the entire term of the instrument. Illustration: T pays $90,000 for a promissory note with the face amount of $100,000. The note provides for payment of the face amount in 3 years and payment of interest unconditionally of $10,000 at the end of the first year, $10,000 at the end of the second year, and $10,000 at the end of the third year, i.e., at the same time the face amount is paid. None of the interest payable at maturity is included in determining the stated redemption price at maturity, since the interest is payable unconditionally at a fixed rate at yearly intervals. Thus, the stated redemption price at maturity is $100,000. If the interest payable at maturity exceeds the periodic fixed rate amount described above, then the excess is included in the stated redemption price at maturity. If interest payable at any time before maturity exceeds this periodic fixed rate amount, if any payable at that time, that excess is treated as a stated redemption price at maturity of a separate debt instrument. Illustration: same facts as in the above illustration, except that the total interest payable is $35,000, with $15,000 of that payable at the end of the third year. The stated redemption price at maturity is $105,000 through $100,000 face amount plus $5,000. The difference between the interest actually paid at maturity, $15,000 in parentheses, and the amount payable at a fixed rate at yearly intervals over the term of the instrument, in parentheses $10,000, if an obligation is issued as part of the investment until that includes an option, security, or other property, the obligation's stated redemption price at maturity is the amount payable on maturity in respect of the obligation. It does not include any amount payable in respect of the option, security, or other property under the repurchase agreement, or option to buy or sell the option, etc. Issue price under 12.456. Issue price. The issue price used in the OID calculation, in parentheses 12.454, close parentheses, depends on whether the debt instrument was issued for money or property, and whether it is publicly traded, in parentheses 12.457 at the sequence, close parentheses. These rules apply even for the new debt instrument that is issued in the corporate reorganization in exchange for an outstanding debt instrument, in parentheses 12.467, close parentheses. For this purpose, property includes services and the right to use property, but does not include money. So it includes services and the right to use property, and does not include money. Thus, it includes all tangible and intangible property except U.S. currency and checks. Also, a debt obligation distributed by a corporation with respect to its stock is treated as though it had been issued for property. 12.457, public offered debt instrument issued for money. The issue price of a publicly offered debt instrument issued for money is the initial offering price to the public, excluding bond houses and brokers, at which a substantial amount of the debt instrument is sold. Ordinarily, the issue price is the first price at which bonds are sold to the public. It includes the aggregate payment made by the buyer under the offering, including any modifications, but it does not change if, due to market developments, part of the issue must be sold at a different price. 12.458, private offered debt instrument issued for money. The issue price of a debt instrument that is not publicly offered and that is issued for money is the price paid by the first buyer of that instrument. Accordingly, when debt instruments are privately placed, the issue price of each debt instrument includes the aggregate payment made under the purchase agreement, including modifications by the first buyer of that particular debt instrument, irrespective of the issue price for the remainder of the issue. Observation: the term first buyer means the original issue or first holder of a particular debt instrument, as distinct from a later buyer of that same debt instrument. Illustration: in year one, J and M each buy debt instruments with a face amount of $10,000 from A corporation. The issuer of the debt instruments The debt instruments are part of the same series of debt instruments, i.e., a series paying interest at a rate of 10% semi-annually and maturing on January 1st, year 20. J buys his debt instrument 10 days before M and pays $8,500 to A corporation for that debt instrument. M pays $8,400 for her debt instrument. Both J and M are first buyers since each is the original issue of the debt instrument he bought. Accordingly, the issue price of J's debt instrument is $8,500, and the issue price of M's debt instrument is $8,400. The above rule also applies to determine the issue price of a net worth note. This is a fixed principal amount debt instrument provided by the Resolution Trust Corporation FDIC or FSLIC as an integral part of the acquisition of the stock or asset of a financial troubled institution. 12,459 debt instrument issued for property where there is public trading. If a debt instrument is issued for property and one, the debt instrument is part of an issue, a portion of which is traded on an established securities market. 2. The property consists of stock and securities traded on an established securities market. Or 3. To the extent provided in regs, the debt instrument is issued for property other than stock or securities of a kind regularly traded on an established market. Then the issue price of the instrument is the fair market value, in parentheses FMV, of the property so traded. We're going to define this word regs. I know it ain't regulations, but provided in regs. I'm not all the way versed in this, man. I'm learning like everybody else, right? What? What the fuck? Legal definition. God dog it. So this. Oh, come on. Doo-doo-doo. Doo-ba-doo. Oh, oh, Lord. So that's 30 months, man. 30 motherfucking months. Yep, 30. Mm-hmm. Doo-ba-doo-ba-doo, doo-doo-doo.